Hello folks, today is April 27, 2024. We're going to do a weekend analysis and review. The financial instrument we'll be analyzing is the Nasdaq, which you can also refer to as Nasdaq CFD or Nasdaq Futures. You don't need to get too caught up in the terms here. Apart from minor differences, the products are always the same. On this YouTube channel, I'll mostly be sharing the Nasdaq CFD index. Therefore, I plan to share my analyses weekly. I hope to provide you with useful content. All right, now let's step by step share my analysis, reviews, or forecasts. When I do my analysis, I always start from higher time frames. I do this regardless of the financial investment product. By higher time frames, I mean it can range from daily to weekly or even monthly time frames. If I'm a swing trader, I focus on daily or weekly charts. If I'm a day trader, I focus on daily or even lower time frames. The types of trades I usually focus on are intraday trades. The chart in front of us shows a daily time frame. Now let's paint the picture and try to understand what we can expect in the coming weeks and which direction the price might move. The price has been consolidating for a long time. Finally, on April 15th, the market structure broke downwards, signaling a change. This gave us new opportunities for the price to go downwards. The most important of these opportunities are liquidity pools and liquidity runs. Yes, you heard it right, liquidity pools. These are price ranges that can be considered treasure troves for institutional traders and traps for retail traders at the same time. Yes, retail traders, they are the majority of the market, characterized by their inability to control emotions, their rush to get rich quick, and their lack of determination and discipline. Let's get back to my expectations in the analysis without delving into the deep teachings here. All right. My primary expectation is that when the market opens on Monday next week, the price will move towards the fair value gap indicated on the daily chart, also known as the FVG area. The price doesn't have to reach there on Monday. It could be any day of the week, because my expectation is not for a drop of 1 or 2 days, but for the price to be in a downward trend at least until the middle of May. When the price reaches the fair value gap, I'll be waiting for setups there. These setups can be any type that reflects your personality. It could even be patterns or formation shapes frequently used by retail traders. The setups I use are usually based on price movement. These include setups that can be detailed, such as fair value gaps, order blocks, which consist of highs, lows, and market direction changes. Our main focus here is our targets, because there are unfinished business at the liquidity levels. Now let's focus on our targets in order. Our targets could be order blocks, fair value gaps, or formations and pattern shapes, such as double bottoms, double tops. As in this example, the weekly order block is a good example. Most traders may see this as an entry position. However, for me, it's a target level that needs to be reached for liquidity. Now let's break down the levels I consider as targets into 4-hour time frames. Why am I doing this? Because I like to diversify my targets. This gives me multiple targets and multiple options. It would be good for you to do this in demo accounts for your own development and gaining experience. This is not investment advice. It's content created for educational purposes. Okay, yes. I usually do my analyses over the weekend, set my targets, and expect them to be reached during the weekdays. This mostly results in accuracy. It's not necessary for the targets shown in the video to be achieved precisely. For this, I always create partial targets. Taking advantage of price movements requires this. Our first priority here is not to get rich. It's to take sufficient advantage of price movements and learn to read them. The targets are as shown in the video. Nothing here is investment advice. They are my personal experience and thoughts. Do not use high leverage. Your gains or losses are entirely your responsibility. Until I see you in the next video, take care of yourself. Good luck. Good trading.